Hello and welcome to The Trade. Before we get to the charts, let's take a look at what traders are watching. President Trump has said he's paused a planned attack against Iran to allow for negotiations to take place on a deal to end the war. And he said that he's instructed the US military that we will not be doing the scheduled attack of Iran tomorrow, but have further instructed them to be prepared to go forward with a full large-scale assault of Iran on a moment's notice in the event that an acceptable deal is not reached. Now, bond yields ease following those comments. However, the bond market is signalling that the war in Iran may deliver a lasting inflationary shock, with sovereign bond yields racing to decade highs and threatening a severe hit to the spending power of governments, businesses and also households. Yields on longer-dated US Treasury notes climbed to their highest level in more than a year before easing. The 10-year at 4.66%, the 2-year was around 4.06%. Australian 3-year government bond yields fell to 4.68%, the 10-year at 5.07%. The US dollar index down slightly on the day. The Aussie is trading at 71.7 US cents. Well, let's get across the charts that matter now. We will take a look at the Aussie shortly, but let's first take a look at what we're seeing on the local equity market. We are joined by Hebe Chen from Vantage Markets. Hebe, welcome back to you. So a number of things to consider at the moment. Obviously what we heard in the budget last week, but also what we're seeing with some of these tech stocks locally. Now, the stock you're focused on is REA Group, which it is obviously under some pressure there, certainly as far as AI developments, but now of course we have those budget measures as well, which may take a hit courtesy of the property market.
Yeah, good morning, Andrew. Yeah, that's spot on. I think REA Group just caught in the both sort of the headwind from the budget and also from the technical stocks softness as well. I'll just focus on the budget. I think the budget definitely have a significant impact on the property market. But I think for REA Group, the story is a bit different. Just imagine if the property market is getting more competitive, quicker turnover, and the buyers have to push harder. I think REA Group actually probably will benefit more than definitely have some negative impact, but I think the story will be quite mixed. And but at this stage, you can see from the prices point that the investors or buyers seems to taking more of a negative catalyst into REA Group's price. As you can see from the technical chart here, this is a daily chart. The chart is clearly under pressure. The REA Group has broken its recent recovery channel starting from the bottom of March and now has breached both the short-term and long-term moving averages, showing that sellers are still quite tight in control. The daily momentum has improved slightly from the oversold level, but if you look at the weekly chart, hasn't shown any meaningful recovery from that. So at this stage, I think it would be too early to call a rebound at today's price. A pullback towards 150 remains possible in my view. I think on the upside, there are also quite heavy resistance there. Number one will be the 165 to 170. That's a 20 and 50 days moving average area, and then there's 180, and then there's a previous support and to resistance level. So I think that quite heavy pressure is still putting on top of the REA Group's prices. But again, I think as I mentioned earlier, I think the prices, the company just sitting quite light in the intersection of policy risk and technical weakness, and also the whole technology sectors as well. The budget has changed the property investment regime quite significantly, and the chart's telling us that the market probably hasn't yet to fully price in and absorb the shock yet, but in the long term, I think that I'm still quite constructive on the REA Group's outlook.
Constructive for REA Group. Hebe, let's now turn to Wall Street and focus on the largest stock in Nvidia now. Of course, it is reporting later this week. A lot of expectations, as always, for Nvidia. It doesn't just need to meet expectations, it needs to handsomely beat them. What are you seeing on the chart, though?
Yes, indeed. A lot of, and actually quite sky-high anticipations for the NVIDIAs. As you mentioned, Nvidia will report earnings tomorrow night after US markets close. The result number, I think, is not about how strong the number is, it's like how that numbers could surprise and impress the investors. I'm putting up some of the number here. As you can see that the anticipation is for the company to deliver from revenue to earning per share to margins, or deliver above 70% annual increase, and that's quite remarkable. But I think for the buyers and sellers, definitely we're taking a bit different perspective. For the earnings, I think for the buyers, the question is whether these currently the sky high, the all-time high prices above 220 already priced in the strong numbers, and whether or not they upcoming earnings could continue to support the prices keep climbing higher. And on the sellers, I think it is time to about thinking about whether or not it's the time to take your profits, and particularly considering that in the past 4 earnings, are putting up the straight line just showing that the price is actually quite volatile in between the earnings and its dividend day. For the technical wise, I think that if the earnings do impress and provide actual catalyst for price coming higher, the chances for prices to continue taking a breakout above 1230 is likely. But on the other hand, if we do see the buyers or the sellers taking a profit from this level, chances are we will see the next support will be around 210. That's a 20 days moving average, and below them will be 200 psychological level. Overall, I think Nvidia's long-term trend is still quite bullish, but the short-term chart showing that the volatility, a bit of the consolidation phase could occur just after the earnings and around the dividend day as well.
That's the view on Nvidia. And finally, Hebe, let's turn to currencies with a view on both the Aussie and the Chinese yuan.
Yeah, this pair that I will pay extra attention this week is because there's so many catalysts coming. Apart from yesterday's China's economy report showing some of the softness, which I think will bring the uncertainty to the upcoming policy announcement. I think will be tomorrow, and the PBOC will announce its 1 and 5 years mortgage rate. For the Aussie dollars, Aussie side, we have the unemployment rate on Thursday. So both of them will likely to have quite significant impact for this pair. For the technical wise, we do see the price, the Aussie dollars versus Chinese yen, is still holding its quite broader ascending channel, as I'm putting up in the chart. But the upside momentum seems to soften a little bit and seems to start to fade. As you can see that the momentum wise also pointing down as well, which do see the quite key resistance around the 493. I think that's a key level, and that level potentially will be the area to watch for the upcoming unemployment rate. For the consolidation area, the potential was seen that in between 481 to 486 support area. If that price breaks below 481, I think the tone will turn more decisively bearish in the chance potentially seeing a softer unemployment rate and open the door towards the 200 days moving average about 475. So overall, I think this is a pair that definitely will likely to have quite great potential for volatilities given the upcoming catalysts.
Hebe, great to talk us through those charts. Thanks so much for joining us from Vantage Markets. And that is the trade.